This is the weekly economic and market update for the week ending 8/26 or August 26th, and a look to August 29th. And what a day! but for August 26th. I'll go through sentiment. I'll go through some measures that I've pulled out, quite a few actually. And then my commentary is going to be on the Fed pause. So, personal sentiment, short term, I'm now 75% bullish, 25% bearish, especially after today. And midterm, I'm 30% bullish, 70% bearish, 0% neutral. And long term, as you well know, if you've listened to me, I am 100% bearish. Let's take a look at the investor sentiment for this week. And what do we have? We've got, we've gone down again. 27.7%. Now, this came out Wednesday. If it went out today, it would probably be, it might even be in the teens after a 1,000-point drop in the Dow today on August 26th, Friday. But Wednesday, 27.7% bullish, 42.4% bearish, 29.9% neutral. And, as being a contrarian investor, I'm loving the numbers as they go down. People are going to get super bearish, especially after today and after Powell's speech. So let's look at some of the measures that we look at. Let's look at the 10-year Treasury. Again, 3.044%. I'm looking for that to possibly get up to 3.2%. And then start the roll over again, from this particular point. The Fed tends to follow the bonds, and we'll just have to wait and see how this plays. But that's my expectation anyway. And so I would see that bonds right now, the Treasury, TLT, for instance, it's well oversold at this juncture. Okay, some of the economic measures. I've got several that I'm going to go through here. Existing home sales continue to go down, 4,810, which is now the lowest it's been in a while. And, just this number, you can see it's just kind of, it's on a decline. Let's just put it that way. So that's on existing home sales. And as the Fed makes borrowing harder, this number will just tank. And then we look at the new home sales month over month. We're down 12.6% in July, looking back to July. So these numbers continue to get uglier. And if we look over a period of time, we're starting to hit some lows here. DXY. Now, I've talked about this before, and DXY is one of those things that we're going to have to keep an eye on. Something's going to break. I'll talk about this a little bit more in the commentary, but you can see it's almost near, we reached 20-year highs, and now we're back close to them at 109. And again, my expectation is that this will roll over, but if it doesn't, the episode I did, or the video I did on Brent Johnson and the Milkshake Theory, I think everybody ought to take 5 minutes and go listen to that, or go find information. I've got links from that particular video. Understand it. But, we're breaking the rest of the world as, if Powell hits up, the Fed hits up another 0.5 to 0.75 of a point, and everybody else is reducing their interest rates, then this is going to be the country to invest in. It's going to be interesting to see how this plays. It really is. Let me go on to these before I get to my commentary. I'm itching to get there. Let's look at Services PMI, but you can also look down here. Services, the PMI is down to 44.1 from 47.3, and Manufacturing PMI is down to 51.3, and the Composite, which is a combination of services and manufacturing, is down to 45. Again, another measure showing weakness in the marketplace. Just for grins, I pulled up manufacturing. The manufacturing index is going down. This is for the Dallas Fed for that particular area, 9.2%. Kansas Fed, down 9%. So, what does this all mean? I'm going to be looking for these Atlanta Fed GDP growth estimates for the third quarter to continue to go down also to, we're at 1.6 now. We started at 2.1, we went up to 2.5. I look for this number to go negative by the end of September. I know I'm very positive about what's happening in our economy. CPI and PCE. Now, I'm actually in the process of putting some videos together on these. I doubt if I'll get them out until next week. As I've gotten deeper into it, these are important because I've always looked at CPI, which is the Consumer Price Index, as the primary measure of inflation. Now, one of the things that I'll go through in those videos is going to be why the CPI has been manipulated. It's pretty well documented. I'll link to a number of videos out there, so I don't want to repeat what's already out there, but I think it needs to be reemphasized to people that the CPI, even though we say 8.5%, is really probably more like almost 18% if we looked at it the way we measured back in the 70s. So what do? I don't know. The Fed has said that they watch PCE, which is personal consumption expenditures. So I'm going to do videos on those particular ones because it's important, from the standpoint of, how are we measuring inflation? And, we know that if the government's going to manipulate the numbers from the 70s, you change the definition of a measure. Now, this is coming from my consulting background. If you change the definition of a measure, you change the measure. So you can't compare anymore. So the 70s, which was supposed to be one of the worst decades ever compared to today, worse than then. And there's no way that Powell is going to be, you're supposed to get the federal fund rates above where your inflation rate is. With 30 trillion in debt, you're not going to be able to raise interest rates to where you need to actually fight inflation. And, I don't know when Powell's going to pivot or, do those types of things, but or just pause. But that again is the commentary. But I think the thing that I wanted to note on here is that, core inflation. Now let's talk about core inflation for a second. Core inflation is when you exclude energy and food. Now, I laugh about this every time, and I'm pretty sure I have in previous weekly economic market updates. But two of the primary things you need to live is what the core inflation rate consists of. So if the Federal Reserve's target is 2%, Then PC is at 4.79% and actually is down to 4.6% this month with the new, actually, that came out this morning. So it's down a little bit more, but that's not the reality. We all know the reality is that we're paying a lot more for food. And again, in the upcoming videos, I'll talk about why the government does this. It will blow your mind if you're not already familiar. But the core consumer price index is 5.91. So why would we use the PCE over the CPI? Well, it's because it's less. They're closer at 4.79% than we are at 5.91%. So it's better. And here's the PCE number that came out today, 4.6%. So it's going down, but anyway, my commentary. The Fed's going to have to pause ultimately. Now, Powell talks a good game. He's completely lost the trust of just about everybody out there with his transitory thing. And again, I don't completely blame the Fed and Powell for the trouble. They were dealt a bad hand, but he took the job, and yes, he should have been doing some of the things he's doing now last fall, but we don't have a strong economy, and the weakness in the economy is going to get magnified here very soon because we're a service. Service and spend is our mantra. We don't save or make, and this is going to catch up to us big time. And my dog agrees. I don't know if you can hear her there, but I don't know what's going to make him pause. It could be that the dollar gets so strong from him raising the rates that the rest of the world screams. That could that could be a scenario. The Inflation Explosion Act. The loan forgiveness. As fast as he's hiking rates, the Fed is hiking rates, the government is spending more, which is inflationary. And so, every time you feel like you're making a little progress, government's throwing another anchor in the water to make things worse. I think it's so far beyond saving that it's it doesn't happen fast, but it's going to happen, and things are going to fall apart. And with $30 trillion in debt, Chairman Powell does not have the tools available. He can't, make 20%. That would be $6 trillion in just interest. We get nothing for that on $30 trillion. Raising the Fed funds rate up that high. Sounds good. He's going to be Paul Volcker, but he can't. It's just not the same situation and scenario that we had back in the late 70s, early 80s. So, I don't know about a pivot and what will happen, but I think things will deteriorate rather quickly between now and the next hike. If he says he's going to hike, he'll probably hike unless he starts to see some of these numbers like, these lagging numbers he's watching, or maybe even the spending, I don't know, or something break, globally. Something will initiate this. And when it goes, like I said, it may not go fast, but it's going to be ugly no matter what. And I still expect that this will all come to fruition where we're all feeling it by next summer. So if you haven't had a chance, watch the video I did on David Hunter, the contrarian, that's on Twitter. It's gotten, 600 and 700 views, which for a new channel is pretty happy with that. I took some time putting it together, did some research and analysis on it. But anyway, that's what I wanted to cover this week. And remember, please remember, there is always a better way.